lecture, we're going to be talking about business pitching. I'm actually going to do a lot of material that's not in the book. It's not all tied for this semester, but I want to give you a broader view of pitching because if you move on as an entrepreneur, this is absolutely something you will end up doing. You'll be presenting your ideas in various places. So I want to talk about how it would be done in general and not just what we do for this class. So quick overview of what we're going to cover. Um, and then we'll have an introduction, some talk about some different types of pitches, a little bit about the preparation business model with respect to your pitch, and then talk about it in terms of pitching and storytelling. Um, and unfortunately, for many people, this idea of pitching and investment is a critical thing. And some people think they have an idea, based on the idea, they're going to get investment. Generally, that's not the way it works. If you have an idea, your ideas are worthless without action, not without investment. If you want to get investment, you're going to have the action first. It's very hard to have it happen any other way. So what is a pitch, right? We're not talking about baseball pitches here. We're talking about business pitches. And every business really starts with a pitch to somebody somewhere along the lines. Pitches don't all have to be about money. Some of it's about getting other resources, getting people on your team. So it's not just about money. And you have to just figure out when you're ready for it. So first, a bit of advice. If you're actually seeking money, you have to be careful. As soon as you ask people for money, it's like they want to grab their wallet. They know something's coming up, and they become much more cautious. And in the beginning, you want to build a relationship. So if you want money, ask for advice. If you want advice, ask people for money because they'll give you advice, uh, but they'll tell you where to go and some basic ideas. But really, your goal as an entrepreneur when you're pitching is to build a relationship that advances your business, not just to get money. So advice is the first step towards moving forward. If you ask for money, you're probably not going to get it. But if you ask for advice, you'll first probably actually get advice, but that will move you towards money. A number of the startups I'm involved with, that's exactly the path they went down. And some of their investors were impressed that they didn't ask them for money. They asked them initially for advice, connections, mentoring, saying, we need to get there before we can really raise money. And then when they went to raise money, they already had these people lined up. They were part of their team. So there's a whole lot more about this in the book by Cohen and Feld called Do More Faster. They're not the only people to say it, but it's a good read if you're looking for more entrepreneurial reading. So what is it an effective pitch will do? So first and foremost, you have to remember that the pitch is really, you want to put their bottom line on top, which we call the blot, or better yet, put it on top, make it first, and also put it at the end so they don't forget it. But you're pitching to get somebody to help your thing, but what's in it for them is very important. The pitching process is also has to engage the listener because if they're not engaged, they're not going to follow through much of anything. You have to build your credibility with them as this is going on. You have to make sure that you're showing that credibility, you have the energy and passion. Right? Part of this is answering the so what, why me, why us. So what's in it for them? So what? Why is this going to change things? And then also why you, why your team, why you're going to be the things to do. At the end of your pitch, that you're really trying to build the steps to the next step of a relationship, and there should be a call to action at the end. What are we going to do? What are the next steps in doing this? So, in my view, pitch is one process, but an important process for building relationships and seeking resources. The very bare essentials, it effectively conveys the essence of your company in some number of seconds to some number of minutes. So it could be as short as a 50-second pitch or a 25-minute presentation of your company's things. But a pitch really isn't about the presentation. It's not the complete story. You should always view a pitch as an invitation to dig deeper for them to come in and find out about things. So don't worry about packing everything in. You want to get enough in your presentation to make it work. Now, in this class, we're going to have some required elements. Those elements are generally required by the time you get to a full pitch. But along the way, you're not still presenting the entire company because it's not that. Okay, so, and finally, you want to create action. You want to convince the target, the person you're presenting to have a follow-up meeting, and you also want to try and get it scheduled. So what's the outcome of a successful pitch? And everyone thinks of getting a pitch as being getting money. That would be great, but that's not most of the time what happens with a pitch. The outcome of a successful pitch is to prepare for the next stage and set up an appointment. No one listens to a pitch and say, here's the money, right? What they're going to do is they're going to listen to your pitch and then invite you to something to get a little bit deeper, and then there'll be another thing. So you can think of it as a sequence of pitches, which we'll get to. Um, You also want to create in the mind of the listener a positive mindset for future success. Even if you see this pitch isn't going to get these people interested, there's not going to be a follow up. You still want to have that positive mindset because they might talk to other people. So it's not a waste of time if you can get them engaged and have a positive view. But you want to avoid wasting time and you want to avoid wasting their time setting up a useful appointment. So before you pitch, you have to know the audience. You want to research them. And if you're doing this for real money, you should know a lot about the people you're pitching to. In this class, you won't get that opportunity. We'll give you some basic advice about who our investors are going to be. You have to make sure you're in the range in terms of how much money and the scope, the stage, and the selection where these people invest. And if you're pitching for a final sale, you have to decide whether there's some potential to make business together, right? So this is not really a sales pitch when you're pitching your business, right? Um, so be careful about trying to make it sound like that. You're trying to build this relationship where they can make business together with you. So some things it's not. It's definitely not a technology description of your product or technology. It's not a direct sales pitch. You're not trying to sell them on your technology. It's not an abstract thing where there's some vague idea of my business. So there might be some technology description of your product in it, so it's not vague, but it's not focused on the technology, but it's also not abstract. You're not trying to really suck them in and persuade them or trick them into investing in you because that instantly backfires. But it's not a process of seduction either. You're not trying to build a relationship that makes them love you. You're trying to build a relationship that's building a business. But and it's definitely not fast money, free money, or easy money. When you're pitching for money as a company, it's slow process. It's expensive. You give a part of your company, and you're going to work for it. So lots of people think, "Oh, I just want to pitch to a VC and I'll be set." It's like, no, you're probably not ready. If that's what you think, you're not ready to go talk to a VC yet. Um, so it's an interesting question. Are you really trying to sell or attract financing when we're telling these people? And it's both eventually and neither for your first couple of pitches. You're trying to attract finances or sell them on your company as an investment or maybe even to buy your company because you could be pitching to have your company acquired. Um, but it's neither of those in the beginning. It's about building a relationship. Whether or not you're trying to sell your company or attract financing, it's almost the same structure in terms of your pitching. It's really talking about why it's a good investment and looking at it that way. Um, and they really end up with some of the same introductions in terms of the hook and building stuff up, the same conclusion, and things along the way. So either it's a short pitch or a long pitch, there's going to be a bunch of those pieces put together. So your first pitches are almost always about building a relationship, so you can pitch more. You go through shorter pitches and get to longer ones, and you want to sort of build your resource in your company is another kind of pitch. Are you going to hire an employee? You got to pitch them the why of the company to come through. And finally, when you're interviewing for jobs at the end, you're actually pitching yourself. So some of what we're going to talk about here, you might say, yeah, I'm never going to sell a business. I don't really care about this. Some of the techniques we're going to talk about for pitching, you could be applying to how to pitch yourself during an interview. And again, it's not selling yourself to them. It's about building a relationship where you can each see the value and move forward with it. So when I said there are many ideas of pitching levels, we'll do a real example, which is YouTube, something you all heard of, but there was a day when YouTube didn't exist. When the people first came up with the idea of YouTube, both as a technology platform, but more importantly as a business, like YouTube makes millions or billions of dollars. How do they do that? Well, the first pitch was actually what we would call an elevator pitch. It happened at a backyard barbecue in the valley, and it was a relatively short, no presentation, no technology, just an elevator pitch to get some people interested. After that, they built a relationship and got invited by Sequoia Capital, actually through a couple of pitches along the way. Sequoia Capital, they give a formal VC pitch where there's a full slideshow and work that goes on. And that builds the beginning of the company. And then a couple of years later, they start building detailed business plans and other materials. And then they have a pitch to Google, which eventually acquires YouTube, right? So all of those are pitches. They're just very different pitches at different places. So I think there's 5 tools you effectively need to engage with investors. The first are the elevator pitches, and I'm going to recommend 3 very simple short pitches. These are things if you're really working at your business, depending on how much time you think you have, you go for different versions of it. And also, if you see the person a second time, you can expand on what the first one was. There's this business model, which is often a direct question after a pitch, especially if you go for a longer pitch, where people want to know the business model. So this is where your canvas or your pyramid might come in, but often a little bit more detail. An executive summary, or what the book calls a business brief, it's a 1 to 2 or 3 page document, relatively short. Again, this is often the follow-up from one of those earlier elevator pitches, and that might include your business model canvas or your business model pyramid as part of your executive summary, explaining what that is. Then there's the full slide pitch presentation, which is what you're going to be doing for your midterm presentation. Actually, you'll be doing an early version of that. March 20th, the week of March 20th is when we're having our midterm presentations. And then there's the final thing, which is actually full financial projections, which is a full business, part of a full business plan. And today we're seeing that, in fact, very often the financial projections are part of this, the pitch presentation, or at least they can be followed up by getting more details after that. Um, and as I said, some of this is your personal things as well. So when you're trying to go out and interview for people, you're going to talk about your personal elevator pitches. And again, I recommend 3 different versions of this, where you can have a 30-second version to talk to a recruiter, a minute version, and a 5-minute version, right? A couple of different elevator pitches of who you are and what you do. Summary of career goals for the next 5 years, your executive summary, right? Again, it's a sequence of things moving bigger and bigger. And using this analogy might help you see why this is building a relationship and moving on to the next stage, not just trying to one thing to get a business. So we're going to go through now a couple of outlines for various pitches. These are not things in the book. I'm not going to be testing you on these, but I still think that they're worth knowing about. So I'll put them out there. So the first of these is what is sometimes called a high concept pitch, also called an IMs, and we'll come back to that in a second. But it's really an imagery-oriented analogy, simile or metaphor, which is why it's IMs. Those are the things that go into it. And this is a statement that makes people understand what you are. So in fact, for YouTube, they originally pitched it as Flickr for videos. Flickr is a image sharing website, but it didn't exist for videos. Now, it didn't actually have the same business piece, but that got people to understand what the core was, and then you can move on to the business piece. For things like Coursera and these online courses, which you guys were taking an online course, but in general for online courses, right? They were originally pitched as massive multiplayer online learning. They're now called MOOCs, massive online courses, whatever. But originally they were pitched in a slightly different way, but they were relating back to these ideas of massive multiplayer online games, right? So there's a connection there, and the people when they pitch it understand that. Second Life's coffee shop in the physical world, right? That's you're using one metaphor related to something else. So the idea for most high-level concept pitches, or IMs, is really based on the concept of an operation, not on the market. In fact, if the concept of operation and the market apply, then it's not exactly the same thing. So Flickr for images wouldn't make any sense, right? It's the same market, it's the same thing, but it's like Flickr, but for videos. That's a different market segment which you're going after. And importantly, and one of the reasons to have a couple of these is it depends on a shared schema, which we call in the storytelling world. The shared schema is they have to know the base analogy. So if you did something that uses an American idiom and you're trying to use that in South Korea, they may not get it at all. Where, of course, if they said something about their culture, you might not get it at all. So you got to make sure that you understand who you're talking to when you try and make that pitch. Generational issues would be the same, right? If you try and tell your parents, well, what we're doing is like Tinder for this, right? They might not know what Tinder is, or might not really understand what Tinder's for. So you have to be careful to make sure you've got the shared schema. And ideally, it's going to have this sort of sticky, memorable visual imagery that helps things work. So, Second Life's coffee shop in the physical world gives people this imagery of Second Life as a online interactive world, and in the physical world, right? So I'm not quite sure what you thought of when you saw that, but you can imagine sort of buying something in Second Life and having it shipped to you, right? I don't know. So do want to avoid wannabe connections to giants. And this sets most investors off in a very negative way. If you say we're going to be the eBay of X or Google for Y, right, they're just not going to believe that you have the credibility to do that. So you often lose points. So you got to be careful that your pitch aims somewhere in the middle for where you have a chance of getting. Okay, so that's a one-sentence metaphor. If you can have one, great. Sometimes it's tough to get it down in a sentence because you don't really say anything else about your team. But what happens after that? If you say, "Oh, tell me more," Flickr for videos, tell me more. So the next version would be sort of a 30 to 60 second pitch, which is sometimes called the elevator pitch. And in this, you really want to have, in my view, this version I call all aces or 7 aces. You can do it with 5 as well. you want to start with that awesome analogy. You want to talk about your smart-ass team having your kick-ass product in a big-ass market. Those are the 5 ones you absolutely have to do. And then since you want to do this where you're going to actually schedule something, you want to ask them for advice. So do you know somebody in this market, or do you know anybody that can augment our team, or do you know any competition? You ask them anything that sounds like asking advice, and you're now bringing them into your story. Okay, so this is, again, it's pretty easy to remember. Keep them in that order, and you have a pretty quick process in a now 30 seconds. So 4 or 5 sentences you can get through to get to it. Slightly larger version of this, which is especially true when you have a little bit more time. So this is also what might be your elevator pitch. Um, is what we call the smartass pitch. It's a little bit longer because you're going to start with a sticky story. I'll come back to what are sticky stories later in this presentation. But now you're telling a story, and then you're going to get to the market, the size of that market, right, all the stuff related to it, your advantages, the results you've had so far, and your team. And then for the last part, you're going to ask for something simple. So ask for another meeting, ask for an introduction, ask for whatever you can. Asking for them and getting them to give you something starts bringing them onto your team. So this again can be done pretty quick. Notice if you're doing it in 60 seconds, you're not going to have a lot of market size, but you're going to say something about your market segment. So you have to keep this very short. Um, and you don't have time to tell them all about your competition or anything else. The next version of this is a 2 or 3 minute pitch. So now you get to one, if you have a little bit longer, which we call the sweet deal. Relatively simple. Again, you're going to start with something similar, the same sticky story. You're going to talk about who cares. This is especially important when you have a multi-sided market where you have users who are not your customers. You have to sort of explain who cares and why, which gets you a little bit into the environment and the competition and what's going on, because you need a little bit more time to explain that story. Talk a little bit about what engagement you have, some customer interviews, early prototype customers and whatever, and then a little bit on your team. Then you can talk a little bit about what you've got in terms of the discoveries you've made. So you might actually talk here about some of the things you learned that didn't work. Investors are often impressed when people have learned from failure, so false starts or whatever could be part of that. Your execution, what you're doing now to keep it going. Your advantage, your competitive advantage, why no one can just copy you and do that. And then the link up is about trying to schedule a next meeting to get a little bit more time with them to figure out where it goes. So again, these are all acronyms to try and make it easier for you to remember what these are. But again, all of these elements give you now a more detailed pitch that gets a little bit deeper. If you have a little bit more time than the sweet deal, you can go for the sweet spot, which is often a follow-up pitch, which is generally slideless, so you're still talking. And it's actually similar, same sorts of things, the sticky stories, who cares, environments, engagement, and teams. It was all sweet. But now you're going to talk a little bit about your secret sauce. So here you're going to say what gives you that competitive advantage that no one else can follow, and a little bit about how you do it. So saying that we have a patent doesn't tell me anything about how you do it. Telling me how we actually achieve lower prices or how we achieve this sort of energy product, right? All of those would be part of my secret sauce. A little bit about your current process execution, where you are, and now is where some of the extra time comes in. You're going to talk a little bit about your overview of finances. Where are you? How much do you? What's your margin if you're selling stuff? How much have your sales been? All of that kind of stuff, and then a timetable for how you want to follow up with them, and your own internal timetable in terms of where things go together. So, a slightly longer version. If you have time and you can actually have some slides, this would be a sort of 6 to 9. So we're going to do the sweetheart deal. So we'll start with the sweet part, which is actually the same as what we had before. It's the heart part. So now you're going to have slides. You're going to talk about how the cash flows, how all that happens, some of your execution. So this is now your business model. How are you getting money in and out of the company? How do you actually find customers, which is part of your customer relationship piece? How you get products moving back and forth to your partners. What are your advantages? Advantages aren't just sustainable, protective advantages, but first mover advantage, whatever else you have, and then some revenue projections. And that's very important for many investors to the point where you're getting. Now, this is the first time we're actually talking about projections. And then again, the same timetable kind of stuff. Where are we when we get to the next level, whatever. This actually fits pretty well to the kinds of presentations you might be giving in the class. And then if you have time and if you're doing this for real investors, again, you'd add the same deal elements, the discovery, evaluation, ask for advice, and link up. So notice the A in this deal is a little bit different from the last one. So when you get to a full pitch, you're talking about more slides and more time. And so the sort of common rule among sort of VCs, there's whole books, The Art of the Start, talk about this. Their rule is the 10-20-30 rule. 10 slides, 20 minutes, 30-point font. No small details on your slides. Another good rule of thumb is if you're pitching to people, the smallest font you put on your slides should be half the age of the oldest person in the room. So if you're going to use 14-point font, there better not be anybody over 30. Right? So, and that's not likely to be your investor category. So keep the text small. You can always talk a lot what's not on the slides. So the next piece is something we'll get to when we talk a little bit more about finances later, but it's really important when you're pitching. In the last three types of pitches where you talk about numbers, it is important that you really know your numbers, or as I say, mow your mumbers. You have to know what these numbers are. Mumbers are made up, or actually more precisely, modeled numbers. These are things you're predicting about your company. And it's not just knowing what the numbers are, it's the process you use to get them. So you have to know your model. What are your assumptions? How did you justify them? How did you get them? We'll talk about that a lot more. In your midterm pitch, we're not going to beat you up a lot for your numbers because we're not going to be that far along. But it's really an important thing. If you've watched multiple Shark Tanks, anytime somebody doesn't know their numbers, the deals fall through and it just falls apart very quickly. It's like, yeah, this guy didn't even know his numbers, right? If you're going to be pitching for people, you got to know your numbers. And as I said, pitching is really made up in sort of sequences. So there's pitching to friends for feedback, pitching to friends for potential money, and going after the angels, getting better feedback. You continue to grow your company. So you're always going to be pitching, getting feedback, getting references, and continue moving on. So just like you're currently interviewing customers, eventually you'd be pitching in a set of growing circles to always get information. Getting feedback from people after they're done, if they say yes or no, you also want to follow up with them and check and get some references from them. Who else might we talk to? As I mentioned for doing customer interviews, the same things are true for pitches. One of the last things you want to say is there anything I should have asked that I didn't? Because you never know what they're thinking. And if you ask that question, all of a sudden they might tell you some more. So coming back to our outline, a little bit about your preparation of business models for what you were talking about for your pitch. So the top three things I've seen in actual pitches, and again, this is going a bit beyond the classes, people who are pitching who don't understand the audience. In this class, we'll give you a little bit of preparation for who will be your final pitchers. Midterm pitches is just Don and I, the instructors, giving you feedback. But eventually, you're going to want to understand a little bit about who that audience is. We'll see. We'll try and give you some of that. And if not, you don't know the actual details of people, you have to understand what an audience is really looking for. And I'm going to talk about that in this piece. People who don't tell a sticky story, especially in like a class like this, but anytime you go to a pitch marathon or a venture capital conference, there might be 10 pitches in a day. If you don't tell a sticky story, they may not even remember who you are, right? So if you're in a pitch competition or pitching in an event where there's lots of people, you want to make sure you have a sticky story that gets them to get to understand. And then three, missing key pitch elements. These key pitch elements are related back to not understanding the audience. You have to understand what they're looking for. So the next part of this, the last part of this talk is really about these first two issues. And if you capture the key elements, which we've already talked a little bit about from the slides I gave you for the previous things, right? You've got the elements, but you got to still connect them to the audience of the story. So first thing, many people love their idea. So, it's, oh my God, your startup idea is just so awesome. But in reality, when you're trying to get people engaged in your company, you're looking for investment, right? Ideas are commodity. You've heard the phrase, ideas are a dime a dozen. In fact, ideas are easy. The execution of those ideas is not easy. So how are you going to turn this to the next stage? So don't expect any investor to say, that's an awesome idea, I'm involved. You got to show us how it's connected. And that execution of dealing with how do I relate that idea and what's the action to show there actually is customer traction, that's what matters. So it's not about your ideas. It's about making these ideas happen, showing that customers are interested, showing that you have a feasible idea that can move forward and connect it to everything else. And part of this is you have to think about, what are they doing? Why are they here? Why is somebody, if they're listening to your pitch, why would they be investing? And they're investing almost always for one reason: to make money. If you can't hear Kevin's, he's all about the money. It's not about other things. Now, there are people that will invest for other reasons, but in general, they also still want to make money. So when you're talking about your business model, that really says, how are you going to take your technical inputs, go through your business model, and get the economic outputs? So you can't just be saying, this will help customers, right? So if I give away stuff for free, that might actually help. I might get lots of customers if I say, I'm going to have free lunch every day, and that's my business, right? Well, that's not a sustainable business. People won't pay you. So there's no way to make economic outputs. Even if you did customer interviews and people said, yes, I'd take a free lunch every day. So you got to go beyond just the customer interaction. But if customers say they're not interested, then you still don't have a product. So, we've talked about the business model pyramid and stuff, but when you're answering questions, you really want to look at a bunch of those layers, putting it together. So understanding who's your target market, what's the business you're doing, what is it product services you're delivering, how do I differentiate that, the value you promise? So what's your customer value separate that's differentiated from other people, because you have to have some way of beating your competition. Um, why will we be the best group, people, whatever, to promise this, and the competitors will try failing to copy it? This is the competitive advantage when you start talking about your value proposition. If every other business in the place can have the same value proposition as you, you're not going to beat them. You have to have something that gives you a differentiation that allows you to be in front of your competitors, and they're not going to be able to copy it very easily. And then what's your formula for ensuring profitability, which means your costs have to be lower than your revenues. And so you have to understand how all those pieces fit together. So these are questions in the investor's mind. They may not think of it in terms of the pyramid, but the pyramid tries to help you answer all of these questions. Okay, so some things a business model is not. It is not a silly wild ass guess based on we're going to grow by 5% per year and stick it in an Excel spreadsheet and see the sort of hockey stick, which is common, right? It's not a guess of the perception, the percentage of the population or even the total available market. So it's not like I can say, we're going to sell to all Android users. I can't even say I'm going to sell to 10% of Android users. You have to have a process that's going to get there. And also, it can't be something where your business model depends on free labor or sales. If investors see you're not valuing your time, they're not going to value your time much either. Now, it doesn't mean that you're not putting in free labor. They actually expect you probably putting in some free labor, but that's why you're keeping part of the company. So expect there to be there, but your business model should include all of that kinds of stuff. And the biggest problem we see very often when people are looking at this is the founder's worldview, coming back to this idea thing, is that they are in love with the product or solution. They think this is a great idea and everyone will instantly see what that is. And if you think about that and think about what we have in our business model pyramid or in the business model canvas, right? The product solution isn't anywhere on that chart. There's a value proposition, which is what's the value this gives the customer segments, and then works its way up. But there's nothing really about the product or solution. It's about the value it's giving customers. So you got to look at the world slightly differently. Now, even though we've talked about this business model, if we think about what is an investor's worldview of this, the investor's worldview is they actually love things that show traction, execution, and protection. So value proposition is important, but not near as much as the customer segments that they can understand are tied to that value proposition, which is not near as important as the activities and stuff you've done to get it to the customers, all of which are small compared to the total revenue and cost structures. When you watch Shark Tank, right, they loved it. They ask questions about margins. They ask questions about distribution, right? Margins are up here, distribution's here. They'll talk about the number of customers. Traction, execution, protection are the things that get them most excited from an investor's point of view. And again, that comes back to why are they investing? To make money, right? What are they really investing in? Well, they're investing in the business. The first part of that, or an important part of that, is you, the people, the team. So part of the point of the business is to convince them that your team and your business will yield the best ROI. And important in that is your ability to show that you can learn, that you can adapt. So pivots and whatever, some people like to try and hide that we had this idea, it didn't work out, we moved here. No, that's showing an investor that you understand how to listen to customers and pivot and move stuff forward, which is more towards the convincing them that you can make this happen. So when you're pitching, less tech, more business and people. The only thing about the tech is and you'll see again, if you watch enough Shark Tank, you'll see this where there are things where people don't believe they can do it, or that it's not protectable and other people just copy you. Either of those in terms of the tech, and you're dead. So don't spend a lot of time on the tech, but you have to make sure that it's technically feasible and technically protected, or some process that gives you the sustainable advantage over other people. So last part of this is pitching and storytelling, coming back to how to give effective pitches with respect to a storytelling model. So pitching really is a kind of verbal persuasion. Your goal is to get people to help you with resources and be part of your team. So the successful person pitching has to demonstrate three important things. They have to demonstrate they understand the listener's needs, Because if I'm trying to persuade them and I don't understand their needs, they're not going to think I can, as a business person, understand how to deal with my customers or anything else. So understanding the listener's needs is very important. If you see various, again, on Shark Tank, you'll see people where they're not even listening to the investors' questions. The sharks ask a question and they don't really answer it. If they're not listening to the needs of the investors, they're done. You have to convince the listeners that they're able and willing to fulfill their own promises. This can be very important. If you're going to do something, you have to be able to show that you can deliver on that. And for most people, past performance is the best predictor of future performance. So to be able to show, I've done this before, there have actually been a couple of nice examples on Shark Tank where somebody comes in and they've already been successful in another business, and they don't get the same level of grilling with respect to a lot of the details that new entrepreneurs do, because they've already have the ability to fulfill. When they say, we're going to go out and sell this, they've already got the track record to show they can do it. So they don't have to spend as much time convincing the listener that they're able to do that. And then in general, investors have lots of choices. So you have to convince them that your proposal, your team, whatever you're looking at, is better than any other competing approaches, problems, ideas, and teams. So there's a trade-off there. So if we look at the 4 key elements of persuasive pitches, which is really persuasive speeches in general, the first is you have to remember what's in it for them. Because if you don't, if you can't explain what's in it for them, you're again going to die. So there's got to be some carrot on the end of your stick so that they can sort of see, oh yes, here's where I'm going to go. Kevin O'Leary is all about the money. There are times that what's in it for them is not just money, even though money's a part of it. As long as they can make some money, but it, for example, might help one of their other companies make money, or it might be something they're personally passionate about because they have kids doing the same kinds of problems. You got to figure out what's in it for them and be able to work that in somehow. And money is a piece of it for many of them. You want to think about this in terms of action-oriented with style with energy. Well, this is important, right? So think about everything you're trying to say in terms of its impact, not just its information. So you don't want to have a sales pitch where your investor dies from detailed, boring bullet point slides or whatever, right? So you want to have something that makes it work. So if you actually think about pitch patterns and how you make an impact, the more words you have in general, the lower the impact. So you want to keep the energy level going up and the word count not too large so that people keep their energy. You want to build an emotional and memorable story. So in the beginning, you want to think of your energy profile as sort of increasing. It's going to end with a call to an action, but in the beginning, you want a hook. This is where the sticky story comes in. Something they remember that gets them to understand who your customer really is or what the problem really is. And then you're going to build that up, build up some energy, emotion, and eventually you're going to get to a call for action where you tell them we get something done. Okay? You don't want to have all that on your slide. This is not about reading your slides out loud. It's about having something that gets them going, builds their energy, and moves them in. So as a part of that, we want to get to this idea of what are called sticky stories. So you want to think about everything you say in terms of impact on your story, right? Which is how you're going to impact them. And to do this, we want you to be successful. So we want you to think of the word success, which comes out of this marketing book, Made to Stick. And so successful stories or sticky stories are things that are simple, unexpected, concrete, credible, some emotional appeal, and then those stories stick. So that spells out success. So you should be able to then use an acronym to help you remember: simple, unexpected, concrete, credible, emotional stories stick. And you want to plan for success. So you want to think about what's in the story that makes it effective and try and make that happen. So plan for your success. So the other thing that I talked about, which I mentioned, was this idea of high concept pitches, right, with these imagery. So how do you build one of those? Well, so the idea of an imagery-oriented analogy, similar, right, is really to create a dominant image in the mind of the reader. And the image can be a visual image or something that so quickly associates something they know that allows them to think they understand the unknowable. They don't, in fact, completely understand it, but they now have a feeling of understanding. And that feeling of understanding helps them understand what you're doing. And if when you're doing that, they actually find something that's emotional connection or something that's concrete, like we just talked about in the sticky stories, that makes it helpful for them, right? And they can make the stories concrete and sticky because they provide some of those elements, even though you only have one sentence. They can fill in all of the 8 important elements of of a good story, from the characters to the other problems we run into. because they already understand that story, and you're saying, I'm like that story, but just slightly different. So, so IAMs are not either right or wrong. In fact, they create different contexts for different worldviews, and sometimes radically different worldviews, and you can convey any of them. So if you think time is money, or is time a river I go swimming in? Is it a predator? Is it a gift? Does it stand still or keep on rolling? All of those are common phrases associated with time. And by choosing one, you're setting a context for your story. So you want to relate things in that kind of way. And that's part of what you get with these high level things. So an example with respect to pitching would be that a good pitch should be expandable, contractible like an accordion. And as soon as I say that, you can imagine the accordion getting bigger or smaller, and that's what you want out of a pitch. So it helps you understand what's going on. So for some business pitches, my students have done in one of the other sections, things might be like, we'll be the geek squad for cybersecurity issues, or we're like online dating to connect artists and developers for paid work. And they actually use the word Tinder, but online dating, Tinder might not be something that the older generation captures, so you might want to stick with online dating because they will understand that. Um, for your own BI experience, if you're a BI student, right? The BI was like getting a bachelor's plus 3 years of intern teamwork experience and problem solving. It's connecting things in a way that allow the audience to very quickly understand it. And you'd be surprised how hard it is to come up with a good one. But hopefully you can come up with one for your business. So parting thoughts, right? Again, pitching is really about putting the bottom line on top, put the most important things first. So if you are pitching and you're a team of seasoned entrepreneurs, then actually pitching with the trim kind of model where you talk about the team first, perfectly fine thing to do. In this class, probably don't want to lead with a team because you guys aren't the strongest reason for doing this. Um, you have to answer, so what, right? Um, what makes your product different? What makes it stand out? So what if you do all of this? And if it's making money, that's okay, but you have to explain how. You have to engage them. You have to show energy and passion. In fact, again, if you watch enough Shark Tank, you'll see lots of times where the idea is but they love the energy and passion of the presenter, of the pitcher, and they're the real deal, and they want to invest in them. So sometimes it's that passion and energy is the most important things. You want to view this as steps to a relationship, and you really want to have to be a call to action. You want to say, here's what we're going to do next. We'll have a lot more detail about the details of the kinds of pitches we'll do in this class. Here are a few useful links. So the week of March 22nd, so it's the week right before spring break, the week after the midterm, that's when your teams are going to be doing your first pitch. We'll give you more details of that over the coming week, but I wanted to have this pitch information related to things because I think the book's handling of this is a little narrow. I mean, Appendix B is pretty good. If you haven't, you should read it because there's a quiz on it. But, they go through some example slides, but they don't really, in my view, convey the energy that you're trying to get out of this and the importance of understanding that this is from an investor's point of view. With that in mind, hopefully you'll be able to make a better pitch. That's it.